Good morning, everyone.
Good
Yeah, this
morning.
is a Sunday morning. Good morning,
Morning.
sir. So we all have assembled on this Sunday morning, and I am your host, Krishna Gopal, welcoming you all to the webinar on crypto as a new asset class powered by our TechBIT, TechBit by BITOSA Bangalore. So you must have heard so much about crypto already, and that's just a brief that this is a digital currency. We have seen that it is decentralized, and it has a potential to change the face of the financial world. We have heard both sides, the positive sides and the negative sides. Positive sides like it is blockchain based, it is borderless, it is independent of banks and government control, and so on and so forth. But all the participants will agree to me that we have heard the more of the negative sides of the uh, this crypto, because back when we crypto was first heard, then in India it was banned after that. So that time we had a lot of interest. I personally had a lot of interest because it was something a breakthrough and a completely new paradigm. So that happened, but then Indian government has banned it. So I personally lost the touch after that. When it came back, then it was heavily taxed. So again, that we were not, I personally was not able to pick up, and I think most of the participants here will agree that they are also not much invested in crypto. So what I hope with this webinar that today. Rahul, our main speaker of the webinar, will give some insights and he will clear all the ifs and buts and bust all the myths around the crypto. And we'll find it as a new, what he is suggesting us, that it will be a new asset class to us where we can be invested. And that is very promising. So, before starting the webinar, let me introduce the speaker, Rahul Prasad. Rahul
Hello,
is the
everyone.
CEO of and co-founder of Tail Wallet, a startup in blockchain space. He has founded Tail Wallet in April 2023. He has done computer engineering from BIT Mesra campus in 2008 to 2012. After college, he joined PlayGeo, a gaming company based in Hyderabad. So there he developed and monetized 11 games. That is an achievement. Then he joined Dormint as project manager. Then Paytm, where he built Paytm ad network from scratch and multi-million dollar run rate. Right? So finally, before starting Tail Wallet, he worked in Point DCX as senior product manager, and that is a Bangalore-based company. He has 10 years of experience in building IT products from concept to market, and some of them has scaled into national and global level with $1 million impact. So that is also a great achievement. I think Rahul should be proud of. And so he has also built entire app ecosystem ranging from the e-commerce, finance, and payments and ad network. He has worked intensively in blockchain, fintech, e-commerce, ad network again, B2B SaaS, and mobile gaming industry. So I think uh, he has a lot of experience in these fields and especially in blockchain. So I welcome Rahul Prasad. Please uh, join this as a speaker of the today's webinar, and this is yours, please.
Sure. First of all, thank you, Krishna Bhaiya, for that warm introduction. And then the next thing is thank you to everyone who has joined today's session, taking some time out on this Sunday morning. I'll try and make sure that this is definitely 100% worth your time. We will get to speed with the entire thing because in order to make the entire session more fruitful, I think it will be better if we first have a bit of an understanding, a structured understanding around what crypto assets are, and then we leave enough time for question answer session. So I think it would be fair that we spend like about 30-35 minutes into just the going through the content for understanding the crypto as an asset class that we have prepared for you all, and then we can take all the questions in the last 25 to 30 minutes. Fair
Yes,
enough?
yes, that was the structure I was about to tell. Thank you for that, uh, giving the structure of the webinar. Before going further, we have two expert panelists here. So we will be asking you in-depth questions so that we'll have a deeper knowledge on the subject. So let me introduce. Mr. Anupam Srivastava, sir. Sir is director at Cape Gemini. He has 19 plus years of experience in AI, analytics, and business intelligence, experience in federated learning, knowledge graph, that is ontology, industry 4.0. He has domain experience in pharmacovigilance, telecom, and retail. In short, he is having the wide experience and vast experience in all the latest modern technologies we have hearing that is buzzing around. Sir is from BIT Misra 2K0 2K3 MCA batch. Sir, I welcome you to the webinar as an expert panelist. Welcome you, sir. Okay. So
Thank you.
also joining us is Prince. Uh, Prince is senior engineering manager. Let me introduce him. Prince is a senior engineering manager at Neo Solution Inc. He has a vast specialized experience in developing mobile applications across all mobile platforms that is available today in the market. So he has experience of working on the complete software cycle also. In short, he is a mobile application wizard. So Prince is from BIT Mesa 2K7 to 2K11 IT batch. Prince, I welcome you to join as the expert panelist to the webinar. Prince,
Thank you, Krishna sir. Thank you for having us. And we are all looking forward to it. And since I know Rahul and Neil also, I'm pretty much sure and confident that this session is going to help us a lot. We will try to help us as much as to take out some learning session from it and learn more about crypto. That's the idea. So looking forward to this session. Very excited. Thank you, Rahul, for joining us.
thank you, Prince, for encouraging words. And moving forward, one thing before handing over to Rahul, I'll just set up the premise. Uh, Experts can ask questions during the presentation. After the presentation, participants will not be allowed to ask questions during the presentation. They will. You can put all your questions in the chats that will collectively ask, and you can put across yourself in the Q&A session. And that will be the overall premise. So I think we are good to go. Rahul, I'll hand over to you, and it's all yours. Please go ahead.
Sure. Thank you. I'll start sharing my screen. All right. You all
Are
can
you
see my
recording
screen now,
the
right?
session?
Yeah, we are recording this session. Yes. So please go ahead, Rahul. We can see your screen.
Sure. All right. All right. Welcome everyone. Today we'll be attending the crypto charcha session that Tail Wallet here is organizing. The agenda for this entire session is for you guys to get acquaintance with what crypto is and understand how crypto is an emerging asset class. While we'll be going through the entire content, the focal point will be to understand how crypto works, uh, to understand how it is an asset class, and then we'll also be looking into how we can initially get started. Because once you start learning about something, you get into a cycle of going through just infinite amount of information, but never start the practicality of it. So we'll also conclude the session with how you can get started with your crypto investment while you are also learning about it. Uh, Krishna Bhai have already given a warm introduction about us, so we'll not be going much more into that, what I have been doing in the past. Currently, what we are focusing on is building the Tail Wallet ecosystem, which is the startup that we are working. And along with that, we are doing Crypto Charcha session. These sessions are done for masses and for the government of India in order to educate the masses and the government bodies that are all around. We have been training police officers, SPs, DSPs, AACPs, IAS officers, IPS officers in Karnataka and in Chandigarh in order to make both the masses and the government in India more educated and informed about what crypto as an asset class is and how they should be exploring this. So this will be the content for today's discussion. We'll be hoping to conclude, cover all of these things within the first 30 to 35 minutes. We'll be first of all learning why there is a mania around the crypto assets. Whenever we talk about crypto as an asset class or the Web3 industry or NFTs or anything, you definitely hear that there is a mania around it. So first of all, we need to understand why is there a mania around it. Then next, we need to understand that what is the opportunity that it brings. If there is a mania around it, then what is the opportunity that it is bringing for the masses and for anyone who is an early adopter of it. Next, we'll go a little bit into understanding how the technology works, what the technology behind it is, and how the technology works. Next, we'll be looking into how to evaluate these crypto as an asset class. It is easy to, just go through the basics of it, but if we do not have an understanding as to how to evaluate these different asset class, how to identify fraudsters, how to identify scams, and how to identify the correct one, and even among the correct project, correct tokens, how do we evaluate that which ones would have a better price action in future or more value addition to the mankind. So we'll be looking into that. Next thing that we'll be looking into is what are the factors which are slowing the adoption, and what should we do about it. And the last thing that we'll be covering is how to make use of the opportunity. So with that, we'll be starting with the content part. We'll now be starting with our first topic, which is understanding the mania. Now, whenever we hear about cryptocurrencies, whenever we hear about NFTs and the Web3 technology, we hear that there is a mania around it. People are overvaluing things. People are just throwing their money left, right, and center to any of the projects over it. So first of all, we need to understand why there is a mania. There is a mania around this entire ecosystem because it is seen as a natural evolution of web. You must have heard the term Web 1, Web 2, and Web 3 a little bit. So let's quickly understand what these Web 1, Web 2, and Web 3 are. Web 1 was the initial stage of the internet wherein only static pages were created. This was an ecosystem in the early 90s and the mid 90s when only Wikipedia kind of pages were created. Because of this, information could be shared really easily with each other, but these wiki pages were not interactive. Hello, am I still connected?
Yes, you are,
Yes,
Krishna.
please
I'm
go
sorry.
ahead.
Yeah.
The power just flickered, so I wondered if I was still connected or not.
Yeah,
Sure.
no,
Sorry.
yeah.
So, yes, so I was saying that Web 1 was just a collection of static pages. This was very much similar to what Wikipedia is even to this date. And this is how internet was in the early stage. This is what created the World Wide Web, wherein anyone could write something and other person could read it. So this was a Web 1 version which only had the capability of read only. Anyone can write and then other person can only read that thing. The second evolution of web that happened was wherein a capability to read and write was introduced. This was when the web became more interactive. Now you could not only read what the other person had written, but you could also interact with it by liking or sharing or commenting or placing your order. These are all actions that you do on the web, and this is what has constituted the majority of the internet evolution in the last 20 to 25 years. You not only look at what the other person's profile is with Facebook, you also share it, you also comment it, you also like it, you place an order on Amazon. You not just see what a seller is ready to sell, you also place an order over there, you share your location with Uber, you place your order with Swiggy. So with the web 2 version there was a capability to read plus write. That is, I'm not only reading what the content is provided by the initial person, but I'm also interacting with it. This was the web 2 ecosystem, and this is what has happened, this is what has been built in the last 20 to 25 years heavily. The biggest company that we hear about right now is the ones which were the leaders in the web 2 industry, that is Google, Facebook, Amazon. All of these companies have become the biggest company, beating all the manufacturing companies in the past 50 years, because these companies have emerged as a leader in a new industry that was getting created, the industry we call as the digital industry. Now, Web3 is considered as a new evolution of the entire web ecosystem, wherein there is a capability to not just read and write, but also to own. We will go a little bit deeper into what is meant by this ownership. But just like in the Web 2 version, there were products like Amazon, Google, WhatsApp being created. Similarly, in this particular Web3 ecosystem, there are products like cryptocurrencies and NFTs and more things which are getting created. Just like this had constituted a digital industry in the Web2 ecosystem, here it is creating a decentralization industry. And all of these changes have happened because now we have a new technology with us, which is the blockchain technology. The blockchain technology is the core defining factor which is differentiating Web 2 from Web 3. It is providing the ownership capability in this entire ecosystem and building this new industry that is getting created. The reason
No.
why there is a mania behind this entire Web3 thing is because in we have seen that in the last 20 years, the Web 2 players have become the winner of the entire market. Companies like Google, Facebook, and Amazon have become the biggest of the biggest companies around the world, which were built in the rising digital industry. This is
Okay.
seen, that is the reason why there is a mania around the Web3 thing.
No. So Rahul, I think we'll take a moment here, and I have a question around this. So like,
Sure.
thank you for the great start. So when we talk about tech, right, especially building a platform as great as trading for crypto on platforms like blockchain, I see that with emerging tech, even today, right? If you look at this, confidence of people talking about the digital money also goes down. Like the chances of fraud getting high, building products which are non-compliant. So, do you want to shed some light on why Tail Wallet is a compliant and a fraud prevented tool? And as a customer, as an end user, how do I get a confident that I could be able to invest money in that and I could be using this crypto token? So it would be great if you can shed some light there also.
Sure. Very good question. The biggest problem with any emerging technology is that there are also a lot of chances of frauds and scams being out there. Whenever a new technology comes in, there is a possibility of new industry getting created with it, and that brings in mania. And wherever there is mania, it brings a lot of fraudsters and scamsters into the ecosystem. And it is only with time when those frauds and scamsters are figured out and regulations around that is created, that is when the industry becomes stable. And after a regular cycle of mania, fraud, crash, regulation, mania, fraud, crash, regulation, the industry improves to a level wherein masses can come and participate it. But uh, that is the decision that every individual has to take. If they want to take part in the emerging industry, once it has become stable, then the chances of making huge returns becomes low for those individuals, because the market has already stabilized. The risk factor is really high in the early part, but the reward is also really high in the early part. Now, to come to the second part of your question, that how can Trail Wallet be trusted as not a fraudster or not a scamster, or how is Tail Wallet investing all the participants over here in understanding that how they can make investment without being duped around it. So this is these are the topics that we'll be looking into in today's presentation. We'll be discussing that how self custody, on chain transparency, these are like two very important factors when you're investing in any of the crypto asset classes. So we'll go deep into this. Third thing is regulations. We do not want to build anything which is completely DeFi in nature and not adhering to the geographical government norms, because we want to build products for the masses. And the only way you can build product for masses is when you are in touch with the government. We started our entire presentation with the fact that we have been in touch with the government bodies from the start. We are going out there and training government officers about what cryptocurrencies and blockchain things are. We have requested an application to register ourselves with the Financial Intelligence Unit of India. And whatever we'll be doing, we'll be public about it. We'll tweet publicly about every single thing that we are building, and we'll build everything according to the rules and the laws of the geography that we operate in.
Wow, thank you so much, Rahul. I think this was really insightful. Yeah, please go.
Sure. All right. So we'll quickly jump on to the next one. The first one, we quickly covered that we understood that why there is a mania. The reason there is a mania, to summarize, is that because there is a new technology which is out there, which is adding an absolute new big capability into the entire Web2 industry and transforming it from a Web2 to a Web3 industry. And cryptos and NFTs and different projects that are getting created in the Web3, these are the products which are constituting this new rising industry, which is the decentralized industry. And that is why there is a mania, because people believe that another new leg of the economy is going to get created because of it. Now, let's look into what the opportunity is corresponding to it. So, On the technology side, first of all, we need to understand that the underlying technology is the blockchain technology, which is letting you create these kind of solutions. And any government that you would hear about, or any person that you would hear about, they would not say have any bad things to say about the technology, because technology inherently is never bad. Nuclear technology is also just a technology. You can create a bomb with it. You can power electricity for the entire city corresponding to it. So it is how you use the technology. So first thing that we need to understand is the technology which is building this entire thing is the blockchain technology. The second thing we need to understand is what are the products which are getting created with this blockchain technology. The products that are getting created using the blockchain technologies, right now there are two major kinds of those products. One are the tokenized cryptos, which are something like a Bitcoin or Ethereum. And the second thing is a non-fungible token, which is NFTs. I'll not be going into more detailed discussion into what a crypto token is and what an NFT is. I think it will be easy for anyone to find this thing out. But these are the products which are getting created in the early stage. Just like internet was a technology, and using internet, the products that were getting created was like WhatsApp or Amazon. Similarly, in this case, cryptos and NFTs are like the products which are getting created. And the third thing is the industry that is getting created overhead, that is called the decentralization industry.
Okay.
Now, in the last 20 years, we have seen that digital industry has become almost 15% of the entire world economy. The world stands at $90 trillion right now, and digital economy stands at around like about 13 to 14 trillion, 13 trillion, which is roughly 15%. So this 15% of the entire world economy has been created in just last 25 years, and it did not even exist. That's why the biggest returns that people have made in the last 25 years are the ones who have invested in companies like Netflix or Facebook or Google, which were built in this rising industry. So the new industry that we will be taking part into is called the decentralization industry. Now, in the for gold, real estate, equity, and debt has been considered as a conventional asset class. These are mostly the areas wherein you take exposure when you want to propel your investments, right? But crypto is easily becoming another asset class because of this rising industry. And the only way in which you can take part in this rising industry or exposure of your portfolio into this rising industry is when you buy or invest into the cryptos. So it totally depends upon the risk appetite of the individual, what they want. Some people may want to have like, just 5% of their exposure into gold. Some people may want to have like 15% of their exposure into gold. That is completely a person's choice. Similarly, we believe that crypto as an emerging asset class definitely should be a part of your portfolio, and the percentage is definitely a personal call.
So,
Now
Rahul, I have a follow-up question on the last slide. Like, as a very layman investors, people who are not very financially educated, maybe someone like me, we have been very keen on investing money, which are very, a strong returns. By a strong returns, it comes with a strong confidence. So if you give me money like, hey, Prince, this is your, probably I will go ahead and put that in FD. The only reason is because other things are more complex. So what do you advise people like me, and there could be many other in the audience also who are still not very, because these are very complex algorithms that returns pretty high, but this comes with their own risk. So what do you think would be the right learning platform for people like me to understand more about how do we get insight into choosing crypto as another investment platform, and how do we take like 15% itself is a very big number considering the world economy. How can we double down on this and zoom in and help people like me to understand how we can get more confidence and bring crypto as one of our investment portfolio?
Sure, a very good question. And I think there is always a hindrance to starting something new. There's always a hindrance to go from zero to one, because you always feel you don't have enough knowledge to get started on something. And in order to do that with investment, I think the best and the smartest way would be to start investing passively. Now, investing passively, when I say investing passively, I mean from the perspective of the user or the investor. A user is investing passively when they are investing into something which they don't need to rebalance themselves. Uh, for example, mutual fund is a passive investment instrument. when a user puts their money into a mutual fund, there is an expert sitting outside who makes the decision, of an expert like a fund house, who is making the decision that what stocks should be a part of this particular mutual fund. They evaluate that on a regular basis. They have a bunch of expert panelists who do that evaluation on a daily basis, and they trade in those stocks on a regular basis. They follow the market on a regular basis. A normal person would not have the time to just start learning about the new asset class and start taking exposure into that as well. So the best way possible for an individual to start would be through these passive investment instruments. A passive investment instrument includes something like a mutual fund, which is being managed by a fund house, or an index wherein the fund is managed not by an wherein a fund is not managed by a fund house but managed by a set of rules like Nifty 50 or Sensex 30, or by small case wherein again the fund is managed by an expert, wherein the expert opinions are taken.
Prem, can you go on mute, please? Prem, can you go on mute? Sorry. Go ahead, Rahul.
Sure. Sure. I was saying that to get you started, I think you should definitely start with what the passive investment instruments are into any asset class. Mutual fund, small cases, indexes, these are different passive investment instruments, and you can easily get started with these instruments. You can easily take like say 5% of your exposure. This also puts a little bit of your interest into the entire thing, and you don't miss out on the opportunity. There is an expert sitting behind the door who is doing all the action, and you can slowly learn with your portfolio growing around how you can migrate from a passive investor to an active investor.
Okay, sure.
Rahul,
Thanks,
on the
Rahul.
same front, I have a technology related question. So nowadays I see the multiple blockchains operations are available, right? Options are available. You go to Ethereum, you go to Bitcoin, you go to Hedera, a lot of there, right? My question is, if I invest in one asset class, right? What is the interoperability among these blockchain providers, right? Asset providers, and manage my abstraction layer so that as a user, I need not worry about my money, my investment, and the underlying ecosystem should be interoperable. I can move my asset from one to another without any risk. So that was my question, technology perspective, how the industry is handling that, so that it'll give me a confidence that yes, my money is safe, it is taken up by, and I can move from one asset class to another asset class across providers. So any thought on that line?
Sure. So this is like a very like an important thing that the industry is going through, interoperability. When you would go and explore the entire crypto ecosystem, you will come across that there are more than 40,000 crypto tokens which are created, and more than 10,000 projects which are available right now. Now, each of these projects offer you some capability, some value addition to human life. Like Ethereum is providing you with some capability, Solana is providing you with some capability, and there are certain action that you can only do on Ethereum but not on Solana. There are certain action you can do on Solana but not on Ethereum. And because of this, you also understand that what I would want to do certain action which needs a combination of the support that is available in Ethereum and in Solana. So how do I carry that operation out? How do I solve for interoperability? The second thing, which is also a part of your question, is that how do I solve for interoperability as an investor? You as a person are someone who wants to take exposure into Ethereum project, and you also want to and you don't want to take exposure into Solana project, but you want to take exposure into the price action of Solana. So how do you solve for these things wherein you don't have trust? You have trust in say a certain number of projects, you don't have trust into a certain number of other projects. How do you solve for these problem which expands across different chains? To solve for these problems, there are actually different projects which are working specifically to solve for the interoperability problem. Solutions like Quant, or Internet Computer Programming, or Cosmos ecosystem, these are solutions which are building solution to solve for this interoperability issue. The industry is still in the early stages wherein this particular thing has not entirely been figured out. uh, right now, the only way to do a cross investment is by with the help of a combined effort of tokenization and bridges, but that leaves a little bit of increases a little bit of your risk into the contracts which are deployed into those bridges and these different tokens. Uh, So yep, you need to definitely study a little bit more on the, what are the factor of the bridges when you're investing in a cross-chain asset.
I hope this
Great.
thing can be covered in further webinars on crypto, because there's so much questions are coming, and so much depth is there to discuss on. I think we'll cover some of the part by part in our further future webinars. Okay, please.
I mean, this one question is like very much technical, so it definitely requires a lot more understanding about the industry in order to get to this point wherein, how do we solve for interoperability in blockchains?
Yeah,
While
Rahul, thank you.
discussing
Please
with
go
you,
ahead.
Rahul, I found that it is very depth, and we have so many different direction to discuss on. So we'll discuss separately on what future webinars we can put on crypto, like this one investment and other thing as asset class. So everything will definitely will come up with future some more webinars on crypto. So okay, Rahul, to you.
Sure. Sure. I'll quickly just run through the slides because so that we have a structure to cover for today. So we discussed about the why there was a mania, and the reason was the entire, new ecosystem being created. We understood that, how do we differentiate the technology from the product, from the industry? And these are the different things that we need to keep in mind when we are going forward, because that will help us in learning about all of these things together. And because a new industry is getting created because of all these product and the new technology, that's why crypto is emerging as a new asset class. The next thing we'll very quickly learn about is a little bit about the technology. Every government out there in the world, or almost every person in the world, they never have a bad thing to say about the technology. Technology is just a capability. What is a blockchain technology? Blockchain technology is a technology wherein using which data is stored in blocks in chains. Okay, now in layman terms, this will sound like very simple and very vague, but it actually is a very big offering. Like when you talk about internet, what do you think of internet as? Internet is just like a technology which is letting you exchange data very easily, but that becomes like such a big value addition to humankind, because now be it a text or be it a call or be it, text plus data or be it video, you can convey all of these information very easily from one person to the other. This is why YouTube is now created. This is why now people are shopping online. So even though the explanation of internet as a capability, something that has providing capability to transfer information and view information very easily, the implication of that becomes like a very big factor. Similarly, blockchain technology is providing you capability to store data in different chain. When you hear about crypto projects, you would hear about a lot of chains which are out there, like Bitcoin chain or Ethereum chain or Polygon chain, and each of these chains are governed by the constitute a single project which is providing you with some amount of capabilities. Now, in the earlier sense, the information was all in the Web2 world, the information was always stored with the company that was creating it, which is what made Facebook, companies like Facebook or company like PhonePe, Paytm very powerful. The reason Paytm was considered a very powerful company because it had this financial data of the users. It knew around which users were spending more on what kind of product, which users were buying which kind of movie tickets, which movies, which users were more frequent travelers and less frequent travelers, which user used to buy how much amount they used to spend on their data pack. So all of these are financial data around users, and when you have an entire persona of the user, that kind of places a lot of power into your hand. And these are the reasons companies like Paytm or companies like Facebook, they have become like such powerful companies because they store a crucial important data of the user. Blockchain as a technology is disrupting that, when it is not letting any company store the information, but the information is stored in chains in the different projects that is created. How does this entire thing work? It is like a complex set of a lot of things. We'll quickly just cover this so that you can understand the broad level terms that are around it. How the technology works is that there are different nodes which give a consensus on what data needs to be added in a particular chain. And for every different chain, for example, Bitcoin is a chain, Ethereum is a chain, Polygon is a chain. For every single chain, there is a different consensus mechanism. Some chains might want to take a particular consensus mechanism like a proof of work. Some chain might want to take a consensus mechanism like proof of authority or proof of stake, and then decide on how to add data into the block. Now, the way all of these nodes talk with each other and come to a consensus, and then they add the data to the block, kind of like constitute a very important factor around how a particular chain works. These things defines different parameters corresponding to each of these projects. We are just going through these terms in the early discussion in order for us to understand how on a very basic level this entire industry works. But to summarize this, basically there are a bunch of nodes who decide upon how the data should be added to the chain, and the way in which they agree upon that is called the consensus mechanism. Blockchain as a technology ensures that this chain, the data in the chain, remains secure and remains fault tolerance. Now, how does this entire thing work? We just understood that data is stored in chains, and data is stored in chains with a particular consensus mechanism that is agreed upon by different nodes. But how does this entire thing come into fruition? How is a project created? How does a project like Bitcoin work, or how does a project like Ethereum work? We just understood the technicalities of how the data is stored in the chain. So now we need to understand how the process works. How the process work is that instead of a company, there is a body called a decentralized autonomous organization, or a DAO in short, which is kind of like deciding on what, how the entire chain should be going forward. So just like you have a company which is deciding that, how this entire suite of products should work. For example, Meta as a company is deciding that how their products like WhatsApp or Instagram or Facebook should work. Similarly, for a particular crypto project, there is a DAO. There are usually DAOs which are out there, which are the deciding bodies, uh, which are the deciding bodies that decide, how this project should be going forward. How the project goes forward is mostly dependent on the white paper and the roadmap. Now, what is a white paper? A white paper is pretty much like the constitution. How does a government work? How does a country work? A country work with a constitution which is written in place. The constitution describes that, how what constitute this country, and what fundamental rights, and what are the rules, and what are the ways in which rules and laws are supposed to be made and interpreted. The constitution defines that particular set of things for the entire country. Similarly, for a blockchain project, the constitution is called the white paper. It gives the vision that what is the direction in which this particular project is supposed to go. Each project in the crypto industry works on a different vision. For example, a project like Bitcoin or Litecoin or Bitcoin Cash or Bitcoin Satoshi Vision, these projects are more focused on a store of value proposition to users. On the other hand, projects like Ethereum, Solana, or Avalanche, these are focused on increasing the programming capacity of blockchain. They are not focused on becoming a store of value like Bitcoin. They are focused on increasing the programming capacity, or in the technical terms, we call it layer one solution, so that more and more things can be built on blockchain. Then there are projects like XRP or XLM, which are actually focusing on becoming the global currency, or the American currency. They are the ones which are aiming to replace dollar and INR and all of these other currencies out there. Bitcoin is not a replacement for dollar. It is not in their white paper. It is not in their vision to replace dollar. It is in their vision to replace gold in the blockchain.
Okay,
Each of
so Rahul, just one very small questions on this. So is it like any kind of certification that is given to the product, like Tail Wallet, which we can foresee that, hey, see, I am IOC certified, or things like this, which for a consumer like me will bring more confidence into the product and system?
No, there aren't any certification as of now. The industry is in the very early stages, so there aren't any certification for any company. However, within India, there is a body called Financial Intelligence Unit. You would understand that when it comes to securities, the government would say that anything which is a security, like a future or an option or a stock or a bond, these things are securities, and corresponding to securities, all rules and regulations should be made by Security Exchange Bureau of India. Similarly, for commodities like gold and platinum, there is another body that the government has created, which is going to make rules corresponding to them. Similarly, cryptocurrencies are described neither as a security nor as a currency, nor as a commodity. The government of India and the government around the world understand that cryptos have a lot of common factors from different kind of entities out there, and hence the government of India has created a separate body, who is going to look after this thing. This body hasn't been created yet, and until unless a body like this has not been created, any of the companies which are working in India, it is like a un unsaid rule that they should at least be registering with Financial Intelligence Unit of India, and they should be working accordingly. So this is wherein we have also submitted our request. The process usually takes a 3-month time. Right now in India, there are 19 companies, only 19, which are registered with the Financial Intelligence Unit of India. And if you are using any of the product in the blockchain space, you should be making sure that at least those companies are registered with Financial Intelligence Unit of India.
So Rahul, just another follow-up on this. There are licenses given to, like NBFC license that are given to the financial institution in India. Is it similar like some kind of license that can be provided to the crypto tokens, or is it unregulated even now, like you have mentioned, FIC is there, Financial Intelligence Corporation, that takes care of it? How does that work?
Yes, no, so this does not work. A company can come in and they can create solutions around crypto tokens, but the entire nature of crypto token is very decentralized. There aren't any specific licenses that can be issued to different crypto projects or crypto tokens for them to operate. In fact, there is no way you can stop anything which is decentral in nature from operating. So how the tokens operate is with the help of a DAO body. That is, there is no company. So you can't impose any rule on top of the crypto project or the DAO company.
Okay,
And that is not possible.
sure. Thanks, Rahul.
Yeah,
I
so
think Abhishek sir
just
had.
to add, since we are,
Yeah.
just to add, like there is no certification, but there are auditors in Web3 who does a smart contract auditing. So if you'll go and see the website of any project, any crypto project, any chains, their smart contracts are audited by third-party auditor who are, experts in finding vulnerabilities in different smart contracts, security issues, bugs, and all, and they give kind of certification to these projects. So that is one of the important criteria to find out whether that project is safe or not.
Okay, yeah. Thanks, Neil and
On
Rahul. And I
similar
think
lines,
Abhishek.
guys, how you're maintaining the data, like there's a lot of compliance and GDPR perspective, right? And across India also putting data restriction. The blockchain is a kind of a global phenomenon, not uncontrolled phenomenon, any boundaries. So when the data goes to a chain, how the data privacy and security gets ensured?
Sure. So, there is another like kind of like a technology support which is called ZK, which is zero knowledge proof. Using this support, you can actually hide the identity or hide a certain pieces of data, and also ensure that the data is not corrupted, or resistant. Data is definitely resistant to any kind of fault tolerance. So, the technology in itself is like very assuring. It is it itself is taking care of the factor that faulty informations are not stored, and the way that users information do not get exposed outside. For that also there is technology support about it. We can go and discuss these things into later
Sure.
discussions, at what ZKs are and how zero knowledge proofs work and all.
Thank you, Rahul. Yeah, please.
Sure. All right. Coming back to the content at hand, we were discussing that how the entire process around the crypto work is that there is a white paper which writes about the constitution of what the project would be. Then there is a roadmap. It describes that what this project, this particular crypto chain would be achieving in 3 months of time, or 6 months of time, or 1 year of time, and how it would be going forward. So when you read about a particular white paper, it tells you about the vision, and when you read about it, their roadmap, it tells you about their short-term goals and the long-term goals that they will be achieving. So these kind of like define the entire crypto project. And then there is tokens which is issued corresponding to the project. Now tokens are more equivalent to shares than a currency. They are kind of wrapping up the entire unit economics of a particular crypto project, and letting user take part in building that particular crypto project with that particular token. So now let's quickly look into how would you evaluate a particular crypto project. Let's take example of Ethereum. If Ethereum is a particular project and ETH is the token corresponding to it, then how do you understand the price action corresponding to ETH token? You understand that when you read that what the Ethereum project stands for, you would have to go to the white paper of Ethereum and read that what is the vision of the Ethereum white paper, what is it that it is trying to achieve. Then you would want to understand how the governance of the Ethereum work. You would want to understand that what are the roadmap items that are added in the Ethereum project. Ethereum project is focusing on adding more and more programming capability so that uh, other blockchain developers can come and create decentralized application on top of Ethereum. When these decentralized application will be created, just like Web2 applications were created using the app support on Android ecosystem. That is when the industry boom for the internet era. Right now we are using an internet in a very aggressive way because we can easily access any of the opportunities using our phone with the apps that are created for those things. Similarly, Ethereum visions that to happen on for blockchain. They are building the programming capability in the ecosystem. They are hoping a lot of decentralized applications will be created. Now, if we are to evaluate Ethereum as a project, what will we need to evaluate? We'll need to look into their white paper. We'll need to look into what their roadmap item includes. What are the capabilities that they are actually saying that they will add in the next 3 months, next 6 months, next 1 year. We'll need to look into how many developers are working into the Ethereum ecosystem. We'll need to look into how many current number of decentralized applications exist on the Ethereum ecosystem. We'll need to look into how many users are already using it right now, and with the new features which are coming to, what are the increase in the number of transactions that we are in expecting on Ethereum. Once we evaluate all of these things, then only we can look into the tokenomics of the Ethereum project and then understand that the supply of Ethereum token is coming corresponding to these rules. The demand will be driven by how many capabilities the Ethereum as a project is adding, and what is the price that could go that demand could eventually support. That is when you can speculate about a price of the Ethereum. So there are a lot of different ways and mechanism in which you can actually evaluate a particular project and make a better educated guess about the price action of different tokens of different projects out there. Now, this obviously is very complicated. Just understanding stocks is very complicated, right? You have to read about their managing director, you have to read about their sales value, their value proposition, their sales, their revenue, their profit, their EBITDA, and so on. And we also looked into that with the crypto projects. There are also like so many different things that you need to look into and evaluate. So these things are actually limiting the adoption of crypto as an asset class. A lot of people are not able to take part in the growing ecosystem because it is difficult for users to understand and evaluate these crypto tokens. Second, the user experience is also broken. It is also very difficult for users to just start understanding how to interact and how to buy crypto tokens. There are also a lot of frauds and scams out there. Right now, there are more than 40,000 crypto projects, but a lot of them are just straight up scams. If you go and start reading about their white paper and their roadmap, you would understand that there is not even enough content there in the white paper. It is not actually saying that it will build something which will be fruitful to mankind. It is just pretty much straight up a scam. Or even when the white paper is good enough, the roadmap is not there. Or even when the white paper and the roadmap is there, there are not enough number of developers. Or even when the number of developers are there, there are not enough number of activities which is happening, which is supporting that yes, they are doing what they are saying that they will do, or they are not delivering on time, or the competitor is performing better. So there are a lot of scams which are also happening outside there in the crypto world. And the last thing is that regulations are right now very strict because the government also understands that this thing needs to go slower. We definitely need to catch up and create more rules corresponding to it so that scams happen less and the technology goes forward in a positive way. These are a lot of reasons which are restricting the users to invest right now. We as a company want to build a platform wherein user can take part in this growing industry easily after being dodged with the dodging all of these scams and solving for the user experience problem that the user has. We discussed this early in our session also, that the way people should go forward taking an exposure in this rising industry right now is with the passive means, uh, with an investment instrument which is being balanced by an expert out there, like a crypto mutual fund, wherein where you put even say a small amount like 1,000 rupee or 10,000 rupee, and that particular amount is distributed into multiple different tokens. It is managed by a set of experts. All the transactions that are happening, they need to be on chain, so that you are completely sure that any wrong activity is not being done. And the fund house which is creating the mutual fund for crypto, they are not actually siphoning the fund out or actually taking a larger share of profit than they said that they would. And the entire crypto mutual fund that we are creating, they are optimized for gas fee. This would let any user easily invest into the crypto asset class and slowly build expertise into how to evaluate these crypto assets. The second investment instrument that we have is crypto small case. It is crypto baskets. It is very much similar to a small case solution, wherein you hold the custody of the token that you have, but the rebalancing expertise is provided by the expert out there. Just like in small case, you get a notification from the expert wealth management institution who suggests that these are the stocks that you should be subscribed to right now. These are the stocks that you should sell. These are the stocks that you should buy, and you just click on the rebalance button and all your portfolio get rebalanced accordingly. Similarly, in this case, in the crypto basket case, you get the suggestion from the experts out there and your portfolio gets rebalanced, and all your tokens is there inside your own wallet. You are holding the custody of your tokens with this solution. The third thing is something that we are looking to build in a really short time. Right now, we are live with the first two solution, which is a crypto mutual fund and a crypto small case. The third solution, which we plan on building in some time, is a crypto index. An index is a very easy rule-based mechanism to follow a market. A lot of people just simply go and put their money in Nifty 50 or Nifty Next 50 or Sensex 30, because these rule-based indexes, they follow the market without looking into the sentiment, and they just subscribe to the top performing assets in that particular sub industry inside that industry. So similarly, we plan on launching some crypto indexes as well. And with these passive investment instruments, we hope that masses who do not have the expertise to understand and evaluate the crypto asset classes, or who do not have the capacity to follow the market on a regular basis because they need to invest time in their hobbies, they can invest easily into the crypto as an asset class. So, yep, that's pretty much all that we had for today's session. Actually, we took like a bunch of questions. We started a little late. So it took us a little more time to go through the entire content. But this was the first round of content that we had for everyone to get them started on what crypto as an asset class is. Remember, it's an emerging asset class, so there is always going to be a lot of scams and frauds out there. So you should start investing passively, and at the same time, start building your expertise around it. I think at this point, we'll let the floor be open for question answer session.
So Rahul,
Yes,
I have
that,
another one question.
that just that was a great presentation, Rahul. That was a great presentation. We think you covered all and touched all of the aspects, and you were in hurriedly covered it, just completed on time. I am surprised that I thought it will take some more time, but you have completed on time. So that's thanks for that. So we'll open for all participants for the Q&A session. And yeah, go ahead, please.
So, yeah, Rahul, sorry to call dips on this again. So thank you so much. I think this was really great. I loved it. As a layman, I learned a lot about crypto. So my question on this, Rahul, for you is like, in terms of finance, right? I see that KYC becomes very important over the period of time. And if you look at last year also, RBI has put a lot of constraint around data center, which I think Anupam sir also asked about this. Prem sir has a question around that also. But more than that, I think there are policies that talk about what kind of schemes you can run in India, and these are governed by RBI. Like you cannot have LRS for SBM Bank to be very precise, right? Because and then you cannot have money outside India. There are channels that you can provide. Uh, what do you see? Like, is there any unregulated body or unregulated policies which can be abused by fraudster to send money outside India? You can term it at hawala money or so and so. So how do we as an end customer get confidence that my money is safe? I'm coming back to P0 question again that I asked in the start, that it's very important for me and people like me, I think, who are not very financially educated, to understand that their money is safe, be it in crypto, be it in FD, be it in any other tool. But the important piece is that I get back my money. So how do you foresee that, or what do you would like to talk about that?
Sure. So for the first thing that we need to understand to answer this question is self-custody and on-chain transparency. The reason people are worried about putting their money into a new bank or into a new scheme is because they lose the custody of their money as soon as they put their money into a particular mutual fund or in a particular bank. The reason is that right now the world exists in a situation wherein you will have to give the custody of your money to any other institution if you want to use their service. If I want to if I want to subscribe to a mutual fund, or if I want to put my money into Yes Bank, I will have to deposit my money into Yes Bank, and then I will lose the custody of my fund. Now, government will come into place and they will make sure that whatever banks are operating in India, they are not mismanaging the fund. They are auditing, they are executing all the rules accordingly, correctly, and they will ensure that the fund of the customer is safe. At the end of the day, Yes Bank is just going to issue a receipt that yes, we owe you this much amount of money. But what if Yes Bank gives some incorrect loans and loses out all of those money because of some bad decisions? At the end of the day, they can declare themselves bankrupt and users' money will go away. In order to solve for these things, regulations are there in place that Yes Bank cannot do any number of unregulated set of activities. There are only a fixed set of activities that they can do, and they cannot. This is how they protect the customer in the CFI world. Now, in the decentralized world, these kinds of checks and bounds happen in a very different mechanism. Any institution which is providing you with any kind of a service, they can do it in two manner. One, they can do it in a centralized finance manner, wherein again they are issuing receipt to the users out there. Or the second manner is that they are just executing all of those actions on chain, and the funds of the users always remain with themselves. For example, if there is a fixed deposit scheme out there, I could take the money of the user and keep it with myself and then issue those activities, or I could keep that money with the user itself and only interact with it in a restricted manner. These things are called on-chain activities, wherein you keep the fund of the user with themselves, with the user itself, and you do not take the money of the user. You only interact with them with limiting capabilities. You need to really make sure that when you're using any kind of a service, they are adhering to these on-chain activities, and the fund that you have, they are completely there on chain and with you all the time. That is the first thing that you should be looking into. The second thing is obviously the risk of a large cap and a small cap. If you're taking exposure into a large cap, uh, uh, it is obviously the less risky. There are obviously more number of people working on that project. There is already so much that the project has achieved, and by the principle of a large economy is harder to fail. Large caps are less resistant to any kind of a market uncertainties. Similarly, in the crypto projects also, something like an Ethereum project, wherein there are more than 20,000 developers working every day, actively, daily, wherein there are already more than 100 million users who are using that particular chain. It is harder for those kind of project to fail. Whereas if you take exposure into something which is lower down the rank, around like 40,000 or even around like 10,000, the risk goes a lot more higher. So I would say that these are the two factors that you definitely need to look into.
So I have one last question, Rahul, if I may.
Sure.
Considering blockchain as a lot of computation happens across the nodes, and sustainability coming being a big way now. So and they keep evolving. So requirement for the hardware and setting up a new company in this space, right? What are the challenges on that space? How you see this can help us in those lines on sustainability plus setting up a new business challenges for the environment perspective?
Sure. So this is also like a very talked about thing that these crypto projects, they are very computation intensive, and that is very detrimental to the environment. The amount of energy they consume, that is just magnanimously high. But that is actually not true for the 40,000 projects which are out there. Right now, out of the 40,000 projects that are out there, more than 45% by volume is Bitcoin. But Bitcoin is a single project. Okay. And Bitcoin as a project is using a particular consensus mechanism, which is called proof of work. Now, the nature of proof of work is that it is making a thing computationally expensive for any kind of a node user to hack into the system and insert incorrect values. This is like the most proof best way to protect the blockchain, but this is computationally expensive. But proof of work blockchains are very few in nature. Only Bitcoin project and XRP and only a few more projects are out there out of the top projects which are using proof of work consensus mechanism. There are other consensus mechanism like proof of authority or proof of stake or proof of history or proof of activity, proof of time lapse, proof of burn. These are different consensus mechanism which are not uh, using computational expensiveness to protect the blockchain. Instead, they are using other technology constraints, and those are less, much less constrained on the environment. So we'll eventually have to look into how this technology evolves, and eventually we also believe that another system should come into place which would replace the proof of work consensus mechanism for something like Bitcoin and provide the same level of decentralization while protecting the environment. But yep, that question is like very much true if you look at the entire cryptocurrency from a volume perspective, because Bitcoin right now is 45% of the entire crypto industry. But when you look at it from a project's perspective, there are only very few number of projects which are using that computational expensive algorithm.
Thank you, Rahul. Nice perspective. Thank you.
I think
I request other participants also to come. Okay, Prince. Yes.
yeah, I was coming to that only, that there are a couple of questions that has been asked in the chat, and there are a couple of audience that we have. Think if there are questions from the audience, we can take it up, or we can go by the questions asked in the chat. We can go through that. So I think there are a couple of questions. One of the
We'll ask
questions.
participants to come forward and ask directly. That will be better.
Sure, I'll be open to that.
Yeah, so in the interest of time, Krishna, let's take top 5 questions. Rest of the question we'll send to Rahul, respond and upload in the portal for the answers,
Sure,
because we're
sure,
already
sure.
over time. Right? Thank you.
So one of the questions, Rahul, that we have for you is, was hyperverse of blockchain technology? Many users have lost their hard-earned money. Do you want to shed some lights on this?
Yes. What is that particular project, Hyperverse? Okay, so
Hyperverse.
again, Hyperverse is something that I haven't heard about. I have heard. I usually look very strongly into what the top 100 projects are in the crypto industry out of the 40,000 crypto projects which are out there. Hyperverse is something I haven't heard about, and you should definitely not put your money into anything without reading them. When you're putting your money into any stock, you definitely do an analysis and evaluation of that particular stock. You evaluate the fundamentals of that stock. You look into who the managing partner of that stock is. You look into what the sales and the profit and all those numbers are. Similarly, when you're looking into a particular blockchain project, you definitely need to read their white paper. You need to read their roadmap, and you need to look into what on-chain activities are out there to support that particular chain, not just follow the social media noise corresponding to that particular project. In this case, with a project like Hyperverse, again, I believe that a lot of users would have just looked into the social media noise that was getting created and not read about those kind of projects. In fact, if you would have used our services to invest into the crypto project, you would not have been subscribed to these kind of projects, because on our platform, we only allow users to invest into those kind of blockchain projects or we allow the experts also to move the fund in to keep the funds exposed into those blockchain projects which are thoroughly evaluated from our end.
So,
Yeah. Prince Bia, just to add on to this, so Hyperverse blockchain was claiming to be layer one. So whenever we are investing in some layer one blockchain, the important criteria to evaluate is whether we can run a node ourselves or not, right? So if we are able to run a node ourselves, then our data or the money will never be lost, right? Because let's say if let's say there are 100 nodes that are supporting that blockchain, and if we are able to replicate a node at our end, then data will be there with us, even though other nodes are shut down. But the problem at this point of time in the entire industry is that apart from blockchain and Ethereum, no other protocols are fully decentralized, right? They are being controlled by company, a private limited company. They still have DAO where decisions are
okay.
being taken through community. But in technology, layer one technology is coming in. The important criteria is to see how big the community is, how many nodes are running, whether we can run our nodes ourselves or not. So these are some important criteria to look into, which was
Okay, sure.
missing in case of Hyperverse.
Okay, very insightful. Thanks, Neil. So, folks in the audience, BNJ, I think you asked these questions. You got the answer from the CTO of Tail Wallet and the product that Rahul has been mentioning till time. This is Tail Wallet. The link we have shared in the chat. We would like to request you to have a look at this, pay, and share your feedback to us. Another question that we have from one of the audience is, how digital currency introduced by government of India is different from other crypto asset? Is it
So
truly
here we'll take
decentralized?
only the questions in chat, and the rest questions we'll take afterwards. So just Rahul, you can answer the first four questions, and then we'll close. And yeah, we'll close the webinar after that. And further questions we'll cover afterwards individually, or we'll cover in the next webinar. So yes, Rahul.
Sure. Sure. So I'll just go through the questions written over here then. The first one is, do you see any challenges due to anonymity and pseudonymity of cryptocurrency transaction? Yes, blockchain has a lot of inherent value addition that they are claiming for the users. Out of these, the top three of them are self-custody, on-chain transparency, and anonymity. However, anonymity is something which can completely disrupt the entire global financial ecosystem. So anonymity is something that different government would more strongly not try to have. They would definitely try and oppose that. That is why any particular project which is operating in complete anonymous manner, Hawala system and all of those other ways in which you can dodge your tax, those things can be done. The government is putting their best foot forward to stop those kind of activities, and our product also do not like adhere to that. We let users take part in the entire growing industry with their KYC detail. We take the KYC detail of those users, and we hope the users to invest without this particular value addition. We don't believe that masses have any reasons to hide their identity from the government when they are investing into these kind of assets. So that's around the first question. The second one is, who decides the white paper? Now, that totally depends on how the governance of the project is structured. Mostly, how a lot of crypto tokens governance is structured is with the DAO. There is a particular DAO in place, or a decentralized autonomous organization in place, which is deciding and on to what the white paper should be. Okay, and whenever a change needs to happen, change needs to be made into the white paper, the DAO votes within themselves, and then they decide again whether a change should be should go in and should be appended to the white paper or not. Again, take the example of the constitution of the country. You have the Constitution of India in place, which was written initially by the people who were, the forming body of India in 1947. And whenever you need to append the Constitution of India, a bill needs to be passed. A bill needs to be passed where it needs to be passed in the houses, that is responsible for adding any kind of change into the Constitution of India. Similarly, for white paper, a bill needs to be passed wherein an agreement needs to be made between all the DAO players about whether this particular change should go into the white paper. And initially, the white paper is written by the founding body which is constituting that DAO, or the founding body which is writing that particular white paper. Third question was around the hyperverse blockchain, and we already answered that. The last question is how much average knowledge conservative crypto investors can expect to earn in a year. I know it's very subjective question, but if you can give us some idea to us about the average earning potential, then it will be very helpful for us. Also, please tell us about your crypto portfolio size, earnings over the year. All right, very good. I think it is like a bunch of questions all jumbled together. So I'll answer each of them separately. How much average knowledge conservative crypto investors can expect to earn in a year? Uh, how much can you expect to earn in a year is totally dependent on what kind of crypto asset are you investing into. Again, remember that in the entire crypto ecosystem space, Bitcoin is actually 45% by the volume. So Bitcoin is the most stable one. It is definitely most likely not going to fall out. And the kind of price appreciation that you can expect on Bitcoin with the 2025 bull run would be something around like say $100,000. Bitcoin right now is trading at around $52,000 right now, and you can go and read different analysts what they are speculating, what their suggestions are for the price appreciation of Bitcoin, and a lot of them would center around that. With the current macroeconomics, wherein the repo rates of the American government is very high, and it is expected to go down 3 times in this particular financial year in 2024, and more multiple number of times in 2025. If no uncertain activities like a pandemic or a war activity happen, then those repo rates should come down, and eventually with the 2025 bull run, Bitcoin should be giving a price appreciation of up to $100,000. That is still a 2x return from its current position. Whereas on the other crypto projects, Ethereum or Solana or Avalanche, you need to evaluate them on a separate basis. All of the other high caps, they have like a potential bull run price activity of around like 2x, 3x, 5x, and a lower cap crypto fund could even have like a price expectation with the next bull run of about say a 10x or 40x or even a 50x. So it's totally dependent on the kind of project that you're looking into and that you're evaluating, and what is the size of that project as of now. Second part of that question is if you can give some idea to us about average earning potential. Yeah, I think that is the same thing. The average earning potential is definitely something between 2x to 50x, depending on the crypto project that you are evaluating for yourself and investing into. We would strongly suggest to subscribe to our crypto mutual fund that we are uh, 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 building on our platform. And with the 2025 bull run, we definitely expect to easily make a 3x return for users who are investing in that as of now. Also, please tell us about your portfolio size and earnings over the year. So right now, half of my money, I'm very much aggressive on crypto. So I have put almost half of my savings into the crypto tokens out there, and I've put other half of my savings into mutual fund, which is like a more stable one. I would not go into details of what exactly those numbers are.
Yes.
On the other, but yeah, right now my exposure into the crypto world and into the mutual fund is like 50-50. And apart from that, I'm investing all of my time into building this particular startup. So I think that is my biggest investment. And my biggest bet again is in the entire industry itself.
Thank you, Rahul, for answering all the questions on the chats and other questions we have received earlier that we will cover separately and maybe in next webinar on a deeper level. So I will request now Priya Ranjan sir to please give extend the vote of thanks and please conclude this webinar. Our
Yeah,
president of the BITOSA Bangalore, Priya Ranjan sir, please.
good afternoon, everyone, and good afternoon, Rahul Prasad. Uh, Such a wonderful talk. I mean, I'm amazed. 2012 pass out, less than 12 years after passing out, you are putting up such a wonderful webinar where you're talking about some of the most difficult topic like crypto. And the way you have prepared yourself, starting from the very basics of what the web one was and web 2 and web 3 and how it has grown up and what the web 3 consists of and what the future looks like. Um, what the future looks like. So, very wonderfully prepared. You talked about defining what crypto is and defining it as an emerging asset class, and how does it look as an asset class today, and how do we get started, with such instruments. And when you talk about the financial intelligence behind such instruments, when you talk about, and you talked about the indexes, how they are getting measured, you also talked about the concerns being raised by people about the KYC and what is the RBI policies around it, and the fact that there is so much of anonymity, which is not liked by many countries and their regulators. And you also address that question, by saying the countries are evolving into their policies so that such things can be allowed. Very interesting talk about the consensus mechanism, which also acts like a control mechanism, right? Or decentralized control. I think you looked at the whole gamut in totality and tried to give us a high level view in such a seminar today, and also answered questions that people raised. It has definitely raised the level of awareness, knowledge, and understanding for many of us, and people like me who've been, the old timers and not really understood what this whole subject is all about. So, wonderful presentation. Very happy with this. On behalf of everyone who attended your session, on behalf of BITOSA Bangalore, I'd like to thank you, and would love to invite you for further such sessions in the near future. Thank you so much.
Thank you, sir.
Thank
Thank you for, first of all, giving this opportunity. And it's really an honor to conduct another session of Crypto Charcha with the BITOSA Group Bangalore. And we'll definitely come again whenever we decide upon another time.
Yeah, thank you.
Thank you, Rahul. Thanks for your time. Thank you, everyone. Have a great day.
Thank you
Thank
everyone
you.
for
Thank you,
joining. Thank you,
everyone.
Rahul,
Thank
especially,
you.
and thank you, Priyaranjan
Thanks,
sir,
everyone. Thank you.
Thank
you,
you.
Rahul.
Bye-bye.
Thank you, team.
concluding the webinar. I will
Thank
close
you.
it.